So 14th place is left blank, then 15th is just a check digit. So this is going to be the composition of. Then these are the forms, various forms, as I said earlier. I've just made a gist of them so that you can, at one glance, you can look at them. Now we come to registration. So far as the major points are concerned, I have covered a altogether different area, that is of the refund. Refund, I think you are aware, there was one refund process which was circulated, made by the committee, joint committee of the empowered committee, and that had also given certain norms, parameters, in which cases you will get the refund. But there is lot of deviation from that process as we look at the GST model law. Which were the eventualities the process has mentioned therein? One is excess payment of tax due to mistake or inadvertence, export including deemed export of goods, services, and refund of input services used in them, because output you have zero liability and on the inputs you have the credit. So naturally you will have a refund. Finalization of provisional assessment, you have paid something in SS in anticipation of some liability, but when the assessment is complete you don't have that liability, so the refund is payable to you. Refund of pre-deposit for filing an appeal and refund arising out of the appellate order. This is also one of the contingencies. Payment of tax during investigation where finally no less liability arises upon adjudication. Refund of tax paid on purchases by embassies or UN bodies. We have already seen they are entitled to the refund. ITC accumulation due to output being tax exempt or nil rated. That is exports, etc. Again, this is a little bit of repetition. Or in case of tax-free goods also, the same accumulation of ITC can happen. ITC accumulation due to inverted duty structure, that is due to tax differential between output and input. So there is a variance in the rate of tax on the output and the inputs which you take, goods and services both. If it is at present also it can happen. Your inputs are majority liable to tax at 4% or 5% and output is 12.5%. In that case what happens, there is a difference in the rate of tax, and that's why, it's the other way around. Output will be lesser than the input, 12.5 the input and the output will be say 4% or 0. In that case there will be accumulation of ITC which will have to be refunded to you. This is one of the eventualities which the refund provisions has considered for giving the, all these situations are not qualifying for the refund under the present provisions which we have under the model GST law. Year-end volume-based incentives provided by suppliers through credit notes. This is also, this is prevalent in many of the industries and businesses where you get an year-end credit note based on your turnover during the year as an incentive, and that reduces your purchase price to a great extent. Many of the businesses, they rely upon for their margin on these credit notes alone. So therefore in such cases this is going to be a major cause for getting the refund. Now this is not specifically considered under the refund provisions. Then tax refund for international tourists. In other countries this is a very prevalent practice that when you buy something within the country and you go to the airport, there is a mechanism available there to return you or refund you that amount of GST or VAT contained in those purchases. So that practice is prevalent in other countries, but I don't see any particular procedure laid down for giving such refunds under the present refund provisions. Now coming to the provisions of refund of tax, sections 38 to 41 deal with the refund and interest thereon. Which are the cases where you are eligible for the refund? Export of goods and services, inverted duty structure or tax structure, rate of tax on inputs higher than the rate of tax on output. These are the two eventualities they have considered for granting you the refund. No refund when the export is subjected to export duty. So as Deepak said, there are certain levies which will still prevail even after introduction of GST. Export duty could be one of them, and if your exports are subjected to export duty, then you will not be getting the refund based on these provisions. Refund application to be made within 2 years from the relevant date. We'll see now what is the relevant date and all. And limitation of 2 years not applicable when the tax or interest is paid under protest. So this is one exception they have carved out, that if you are paying it under protest, but how do you convey that protest to the authorities? There is no prescribed procedure for that. You will only have to write some letter giving all your reasons for the protest, and thereafter that can be proved that you had contested the levy or whatsoever. So export of goods and services and inverted tax structure. These are the two eventualities they have considered for the purpose of granting the refund. Procedure. I don't see any prescribed form. It is yet to be prescribed because the refund process, as we have refund rules, as we have the draft rules in case of registration, payment, etc. and returns, we don't have them for the refund process. So I don't see any prescribed form as yet, but there should be, like our 501. Application to be accompanied by documentary evidence to prove export of goods and or services. The documentary evidence is what? In case of goods, of course you have bill of lading, you have BRC. If you look at the process of refund as circulated by the joint committee, you will see the list of all documents which need to be uploaded to prove your claim. So it is like export bill of lading, bill of entry, bill of lading, shipping bill, then BRC. All these documents will prove, or airway bill, etc. These are the documents will prove that the goods have actually crossed the custom or the country, and therefore they are eligible as exports. Documentary evidence to show incidence of such tax and interest is not passed on to any other person. Rules may provide CA certificate. Now here one has to remember the principle of unjust enrichment which is in vogue under the excise and service tax law. We have not been dealing with it, or we are not so familiar with that principle here under the VAT Act. But undue enrichment is a principle where you pass on the burden of that tax to your purchaser or customer, and still you claim that refund from the government, and which is not allowed by them. So you will have to give certain evidence to show that you have not passed on that burden to the customer or consumer or the purchaser, whoever it is. And for that purpose, the CA certificate may be required. Of course, this will have to be provided by the rules. The process says, refund process says that CA certificate may be required for the claims above 5 lakhs rupees and so. Below 5 lakhs, the applicant himself can certify, self-certified declaration that I have not passed on any. But of course, he will have to rely upon, base his statement upon the actual documentary evidence he has in his possession. He may not be required to upload it, but then he should be very careful while making such a statement. No documentary evidence is required, but only declaration for not passing the tax incidence, as in the process they have provided for under the Act also. Now, what is the action by the officer in case of refunds which you have applied? If he finds that the application is correct, he may grant the refund, which will happen as usual in a very, very, very rarest of rare cases. In case of export claims made by notified persons, now notification will have to be issued for this purpose. Officer may grant 80% of the refund provisionally and balance 20% after due verification. Here they have not prescribed any conditions for bank guarantee, etc. It is only in respect of certain notified persons that 80% refund will have to be given outright and 20% to be reserved only after verification. In any event, refund order has to be passed within 90 days from the date of receipt of the refund application. Application means complete application containing all information as may be prescribed. So either there will be a prescribed form or they might prescribe the information which they need for making such application. So unless and until all the requirements or the fields they want for the purpose of application are given by you, it will not be considered as a complete and correct application. Refund may be withheld until the person files pending returns and pays the taxes. This is very natural, of course. If you have pending liability against you, you file the returns and not paid the taxes, then that liability will be first adjusted against the refund, and if there any balance is there, it will be granted to you. Refund may be reduced by an amount of tax, interest, penalty remaining unpaid. This is in respect of the assessed dues of tax, interest, etc. Unpaid amount of tax, interest, etc. to be deducted from the refund amount only if it is not stayed by the appellate authority by the specified date. So appeal provisions are there where you get the stay order as well. Now what is the specified date after which they have the liberty to adjust that amount against your refund amount? Specified date has been mentioned. The last date for filing an appeal when no appeal is filed, and 30 days after the last date of filing an appeal when appeal is filed. So if the 60 days are provided for filing an appeal, then if you don't file an appeal, then from 61st date this provision will apply. If you filed an appeal, then 90 days will be given total, 60 plus 30, and from 91st day the provisions will apply. So that is how they have provided that from the specified date onwards they will get the power to adjust that liability as per the order against the refund payable to you. If officer is of an opinion that any issue relating to refund application is likely to affect the revenue adversely, refund may be withheld by him after hearing the applicant. Refund is ultimately granted, is eligible for interest under section 39. Fair enough. So they can withhold the refund if they find it is adversely affecting. Which are these cases? We don't know. We can have some clue from the present scenario where they feel that the issue is not decided properly by the tribunal or otherwise, or in case of certain controversial issues, etc. Or in case they feel that the ITC has not been properly granted, whatever. In that case, they can withhold the refund. Same procedure or same eventualities may be there under the GST law as well. No refund if amount is less than 1,000. So the petty refunds will not be granted to you less than 1,000. Now what is the relevant date for the purpose of export of goods? First we consider the goods and then we consider the services. If such goods are exported by sea or air, the date on which ship or aircraft leaves India. This is the date, very clear, no problem. If goods are exported by land, the date on which such goods pass the frontier. So in case of say Nepal, Bhutan, etc., we have those cross-border certificates that they are also endorsed by the customs authorities of that receiving country. And these are considered as a proof of export. So if it is by land, then that particular date will be taken as the goods crossing the limit of the frontier of the country. If the goods are sent by post, the date of dispatch by the post office. So that is also available on your document. So these will be taken as, so where the goods are concerned, it won't be much of a problem. If goods are sold as deemed exports, SEZ, etc., the date on which return relating to deemed export is filed, here they have made certain deviation. So if it is deemed exports like SEZ, EOU, etc., then in that case, when you file a return, now we know the return has to be filed by a prescribed date. If you file it, then the date, relevant date will start from that particular date. So there is this is a little variation from our usual principles, where we take a date of export as the actual passing of the goods or actual delivery of the goods to the foreign buyer, or maybe crossing the customs frontiers of India. That so far we have been considering as the date of passing or export. There will be little deviation here. Then in case of export of services, which is going to be the relevant date, the date of receipt of payment in foreign convertible exchange, where supply of service is complete prior to that date. This is in the normal order. You first provide the service, then you get the payment for that service, and if it is in the case of in foreign convertible exchange, the date of receipt of such foreign convertible exchange will be taken as the date of export of services. Then date of issue of invoice, where payment is received in advance prior to the date of invoice. This is in the reverse order now. So you receive the payment first and you issue the invoice later. Now the service tax people who have been dealing with the service tax, they are quite familiar with all these concepts. They are new to us, so we will have to ourselves develop and try to unlearn what we have already learnt about the goods and all, and this will be a new area for us learning. If the tax becomes refundable as a result of any judgment, decree, etc., the date of communication of such order. In case of inverted duty structure, the end of financial year in which such claim arises. So as I said, inverted tax duty structure is one of the conditions or eventualities where you have accumulated ITC which needs to be refunded, and the end of the year will be taken as the point from where this will be taken as a relevant date, from where the 2 years period for filing the application of refund will start. In case the tax is paid provisionally, the date of adjustment in the final assessment. So these are the various conditions, or the you have interest also. If it is not granted within 90 days, then the rate will be specified for granting you refund, interest on such refund. Any order is passed by the appellate authority, etc., the date of appeal order shall be considered for the computation of delay. Now this is so far as the refunds are concerned. Of course, I cannot consider all the possibilities and the the events which might occur while granting the refund, because there will be many combinations and permutations where your refund might be stuck by the authorities on some or the other ground. Now, though everything cannot be considered now, unless and until we get the practical experience under the GST law, we will not be able to visualize such situations. Now this is so far as the refund is concerned. Now coming to the other machinery provision regarding payment and returns. Section 35 to 37 deal with payments under GST law. Payments basically, now there are draft rules provided for the payment also. Challans, etc., they have been provided. The registers which are to be maintained on the electronic system of the department, that is GSTN, those are also prescribed, and provisions are also there under the model GST law. So accordingly we have to now understand what is going to be the procedure for payments and returns. Payments can be made either through internet banking, credit debit notes, NEFT, RTGS, etc. There is one more mode, and that is physical OTC payment, they call it, over the counter, when the payment is less than 10,000.